So, hello.
Hello.
My name is Diane Griffith. I own a law firm of one, me, myself, and I. It's called Griffith Law and Tax. It's primarily tax, but there's a lot of law thrown in there. And my contact information is at the bottom of the screen. A little bit about me. I moved to Florida in 1987. I went to USF St. Pete and got my accounting degree. And then I went to Stetson Law in Gulfport for my law degree. I've been a member of the Florida Bar for 20 years now and a bookkeeper / accountant for a lot longer than that. And my practice includes real estate, tax, corporate law, estate planning, and probate. But the majority of my clients are tax clients. They come to me when they first start up their business. I help them get incorporated into the right structure. And then we get into their books. We help set up a bookkeeping system for them so that they can keep track of their expenses and their income. And then I normally do payroll returns for them every quarter. And at the end of the year, I do a corporate tax return. Keeps me in touch with my clients. I prefer it that way. That way, at least 4 times a year, I'm checking in with them, seeing how their business is doing. And what we do with payroll is I kind of play it by ear, especially when people are just starting out. I called them up at January, February, March is the first quarter. And I called them up in April and say, how'd you do this quarter? And there's, Diane, I didn't have any sales at all this quarter. So, okay, let's report 0 payroll for you, and then we'll check it again next quarter. And then the quarter after that, maybe they had 10 grand in commissions. So maybe we'll put $1,000 into payroll for them, just pay a small amount of payroll tax. And we just keep checking it quarter by quarter. So that at the end of the year, we put something into payroll for them and paid some payroll taxes on it. So it works pretty good. I enjoy that. I enjoy being able to nag my clients at least 4 times a year and catch up with them and see how they're doing, what's going on in their business and in their lives. So I don't know how many have any of you set up your own businesses yet or not? Okay, good. Perfect timing. So, okay, what are your options here in Florida? You can be what we call a sole proprietorship. We also call that a Schedule C. And what that means is that you operate under your own name or possibly a DBA. I could just call myself Diane Griffith and operate a business under that name. People would pay me under my Social Security number. And I would only put my income and expenses on a Schedule C of my Form 1040. So you don't have to do a separate tax return for your business. It's the simplest way to go forward is to report that on a Schedule C. Costs you a lot less money. The problem is that when you start making more money, it's going to hurt you. It's going to be painful. And that's why I wanted to talk to all of you before you start making good money. Sorry. Okay, let's talk about a fictitious name. If you want to operate, let's say I wanted to open up a business called Diane's Cupcakes. I could do that, but I need to register my fictitious name with the Florida Division of Corporations. It only costs $50 to set up a fictitious name. You can get an EIN, which is an employer identification number, and operate under that business name. The first thing you have to do is advertise it in a newspaper, of course. But then you can operate under that fictitious name for 5 years, and you can renew it after that. The next option is a limited liability company, and everybody loves those. The reason they love them is because they offer you the highest level of liability coverage. And I'll tell you why. Some people won't agree with that, but when you set up a limited liability company, you have to put those words, limited liability company, right in the name of your organization, or you can abbreviate it as LLC. And that way, if I set up Griffith Law and Tax LLC, and someone sees that, they know that I have limited liability protection. So, and what that means is that if someone sues me and I have an LLC, the only thing that they can get from me are the things inside my LLC. If I own a vacation home, they can't touch it. If I own rental properties, they can't touch it because I've told them from the start, I have limited liability. Welcome, go on in. The next option is a limited partnership. No one does those. I've never done one for anybody, and I don't even know why they still offer it. And then finally, we have corporations. You can be a nonprofit corporation or you can be a for-profit corporation. And there's a little subcategory in there called professional association, or PA. And what that is, it's only for licensed professionals in Florida. If you have a realtor's license, if you have an attorney's license, if you have a doctor's license, then you can have a PA. The only distinction is that you can only do what you're licensed to do in the PA. So if I have a side business, Diane's Cupcakes, I can't run my cupcake income through that PA. I can run my tax step through it because it's attached to the law, but I can't run selling jewelry or any other side hustle through there. So those are your options. So anybody set up a small business yet?
Yesterday, I was at the bank and I waited for this class. So I was thinking about a sole proprietorship.
Okay.
So to start, because it's the cheapest way, I guess, to go.
Right.
Does it have to be this whole proprietorship? Could it just be under my name? Doesn't have to be a business for a bank, or should it be a business?
You can start out any way you want.
So it doesn't have to be when I open up an account, it could be.
It does not.
Okay.
But once we get further into this, you may change your mind about that.
Okay. Diane, just see that sometimes people hit a chat on a chat, so click on the chat so you can see what they asked. Oh, yes, just X out. Thank you.
Okay. All right, why incorporate? Number one, we talked about it, protect your assets. What's in your corporation is in your corporation. If you have additional properties, you don't want them to be subject to a lawsuit. If you get sued, they're limited to what's inside your company. And the reason why is that the corporation is a separate legal entity. When you set it up, you're going to get it an employer identification number from the IRS, which is almost the same as a social security number. And when you transact business with people, it's your corporation transacting business. When I sign a contract, I don't sign it Diane Griffith. I sign it Griffith Law and Tax by Diane Griffith, its president. So if I sign a lease, the lease is with my corporation, not with me. They can't come after me unless I sign a personal guarantee and say, you broke this lease. Same thing with suing in court. It would be my corporation suing or getting sued, not me. And that's important. It protects you from any creditors that might be sniffing around. I think it's easier to borrow capital too with a corporation. You'd be putting together tax returns, you'd be putting together financial statements. And if you're looking to expand your business down the road, it certainly is a plus. And also there's tax savings. And we're going to talk about that in depth here. Okay, drawbacks, documents. Lots and lots of documents. You start it with the Florida Division of Corporations, which is sunbiz.org. You start by filing your initial documents and paying your filing fee. And then every year after that, they request an annual report. It's not an annual report, it's an annual fee. They want you to just pull up your documents, make sure that nothing's changed, and pay the fee. That let me show you the Sunbiz. I hope this will work. If you haven't been on Sunbiz before. For Florida, it's a great website. Almost none of the websites in Florida, the Florida government work, but this one does. Here's the link for starting your business. It talks about the different types of businesses that you can set up. They have all the forms you could possibly want for any and all type of entity. They tell you what the fees are here. You can change your business if you want to amend something, one of your documents. You can search records. That's probably the most useful thing. You can search by the name of the company, by the officer, registered agent, and it will pull up. You can, because what you're going to want to do is have a corporate name that's unique from anyone else's. So you want to do a search here first to make sure that that name's available. Otherwise, when you try to file it, they're going to kick it out and say, sorry, someone else has it.
Okay.
Sure.
Is this just searching if you incorporated in Florida or anywhere?
if it's registered with the Florida Division of Corporations.
Sure.
So a lot of people will set up a foreign company up in Delaware and then bring it down here and operate as a foreign corporation. So if they're registered with the Florida Division of Corporations, they'll be on here. And it will tell you if they're in good standing, if they've been dissolved because they haven't paid their fees. It'll tell you who the officers are, who the registered agent is. That's a big one. In Florida, you have to have a registered agent for your corporation. And that is the person, if someone wants to sue your corporation, that's who they're going to serve. There are companies who just do that. They set up and they just act as registered agents for corporations. It gives you some anonymity, right?
So I have an LLC in Pennsylvania, which is where I was living.
Right.
So do I need to like transfer to Florida now?
If it's operating down here,
I mean, I am operating, I guess so.
yeah.
Okay.
You either need to move it here or you need to set up a new one down here. It might be cheaper just to move it here.
Okay, gotcha.
Because then you get out of the Pennsylvania income tax up there. Something to talk about later. But your registered agent has to be in the office during certain business hours. I think it's 10 to 2 now. So you want to designate somebody who's going to be there. The odds of your business getting sued are small, but you can use yourself, you can use anyone that you want in Florida to serve as your registered agent. Let's come back here.
Is your question?
We got a question in the back.
Oh, sure.
You noticed that you said that you had to look and search to make sure that the name's already taken.
Right.
Now, can there be words that are in the other?
Yes.
So how do you kind of?
So if Griffith Law and Tax PA was taken, I can still use Griffith Law and Tax LLC. Or I could use Griffith Law and Tax of St Petersburg or any variation of that.
Okay.
So as long as that particular name, just a little bit of a differentiation can get you in there, yeah. So how much does it cost? Well, and here's the reason why no one does limited partnerships. It's $1,000 to set one up. And every year it's an additional $400. So that explains a lot. You can set up a regular profit corporation for $70. And then the annual fee after that is $150. That's much more economical. The LLC is $125 to set up and $138.75 to renew. Not sure what the distinction is. And like I said, DBA is only $50. Down here, your fees are due January 1, and they absolutely must be paid by May 1. If you do not do that, there's a $400 late fee. That's painful on top of a $150 filing fee. So, but to be fair to the Division of Corporations, they will start nagging you. They will email you reminders every month starting in January. Your annual report is due. Your annual report is due. Your annual report is due. So yeah, they really nag. And what I do with my clients is I have them all in a list in a spreadsheet, and I go through and check every single one of them at about the beginning of April. And anybody that hasn't already renewed, I start nagging them too, because I don't want anybody to get hit with that fee. If you don't pay the late fee, then they will dissolve your corporation in September of that same year. And then you can't use that same name again for an entire year after that. You'd have to go with some other name where you have to pay them the $400 plus the $150.
And for class purposes, you said this whole presentation is going to be available or? Okay.
Oh yeah, this is going to be linked on my Facebook page.
Gotcha.
And it's going to have sound to it. So you can share it with anyone you want. You can download it. You can do whatever you need to do. It's important to get this information out because a lot of people set their companies up the wrong way and they don't realize that until it's too late.
And how do we find it on Facebook?
Diane Griffith and Griffith Law and Tax is on there as well. Okay, additional forms developed. This is what I mean by documents. You need to file, most likely you're going to need to file a corporate tax return. It's either going to be an 1120S or a 1065. Payroll returns, you're probably going to need to do quarterly. And the year-end documents, the W-2s, the 1099s, there's a year-end payroll that goes to the IRS. Lots and lots of documents. We talked about an employer identification number already. And we're going to talk about S corporations coming up here. The form for the S election is 2553, and it's available at irs.gov. Additionally, when you set up a corporation in Florida, you are subject to the Florida statutes. And they require you to have, number one, an annual meeting of the shareholders. And they require you to take annual minutes of that shareholder meeting. And you're going to say, Diane, there's one of me in my company. How am I going to have an annual meeting with myself and take minutes? And I promise you, as soon as you incorporate, you are going to get bombarded with people who want to do this for you. They will say, you are required under Florida law to have an annual meeting and to take minutes, but we will do that for you if you pay us $200. What they don't tell you is that it's very likely that no one but you will ever see these annual minutes. You can sit down with a cup of coffee and you can write them on the back of a napkin if you want and throw it in a drawer and you're done. There's no formal requirements whatsoever. They're not filed with anybody. The only time you would ever need them is if you got sued and somebody was trying to what they call pierce the veil and break through your liability coverage, your liability protection, and they would start demanding all your corporate documents. We want all your minutes going back 10 years and you pull that napkin out and hand it to them. So what I suggest is that at the end of the year, write down, get a piece of paper and write down the big stuff you did in your company during the year. I opened a bank account with Regions. I took out a credit card so I could buy some new equipment for the office. I bought a work truck so I could start carrying some of the stuff around. Put all that down, and when you go see your tax preparer, hand it to them and say, this is what I did this year. And they're going to say, oh, great. I see you have a credit card line now. I need those credit card statements. And let me get the documentation on that work truck so I can start depreciating, things like that. You're in perfect compliance with the laws. There's also requirements on keeping your accounting records, having financial statements prepared. And if you go the LLC route, you need to get an operating agreement, particularly if you have a partner. Those are useful things. And a lot of people don't do that. They go into an LLC with their buddy and they don't realize they need an operating agreement because it covers things like, well, if my buddy gets a divorce and his wife comes for the company stock, I don't want to be partners with his wife. So that's addressed in there. Same thing with like bankruptcy. If they file bankruptcy, it automatically buys him out of his stock. So that doesn't become part of the bankruptcy court. So fun things to know about setting up a corporation.
But that's all, that's if there's more than one.
More than one person. Yeah, you're not required to have one, but if you're going to go into business with someone, make sure you do. You can find all the statutes at this link. This is also another good site. Everything you ever wanted to know about Florida law is on this site. And right here is the business organizations. Sure it is. Oh, it's not clicked on. Okay, so we have liability companies, limited liability. We have regular corporations. We have for-profit corporations. We have nonprofits, partnership laws. All of these have things you need to know. So that's a good reason why you need to talk to an attorney before you start setting up your company. And I know everybody says, you know, who can afford that? I'm on a shoestring right now. I need to focus on marketing and getting my clients on and getting a website up. But it's important because if you do this wrong, it can't come back and bite you. Any questions? Okay.
Can you give us a couple hypotheticals,
About what?
like to come back to bite you?
Oh, I'm going to. I promise you, I will make that crystal clear for you. Oh, let's go. All right, other legal issues. If you're going to have a home office, you want to check to see if you're allowed to do that. If you're in the city, check with the city itself. If you're in unincorporated areas, check with the county. Some of them do allow you, as long as you pay them a fee. Other ones regulate whether or not you can have customers come to your home. There would also be slip and fall issues, that kind of thing. So things to take into account before you start working from home. Taxes are also going to be an issue, and we're going to talk about the number one issue is self-employment tax. That's the come back and bite you. There's also reemployment taxes. You're going to pay in about $189 a year for yourself as an employee in case you happen to fire yourself. And it seemed silly until the pandemic. But when these people got hit with the pandemic, they were able to claim unemployment insurance when they had no money coming in. So that little $189 that you're paying a year, you could end up getting back $500 a month in unemployment. So take that seriously. Payroll taxes, we'll talk about that. And depending on your business, you might be subject to sales and use taxes, but you don't have to worry about that here. Okay, so here's why this is important. This is the come back and bite you. Let's say you worked for XYZ Corporation and they hired you with a $50,000 annual salary, but you don't get $50,000, right? Because they're going to take taxes out of you. The first thing they're going to take out is federal withholding, and you're going to tell them how much you want to take out. I just went with a random 10% here. But what you want to do is take enough out so that you don't owe the IRS anything at the end of the year. You don't want to get a refund back. You don't want to owe. You should come out flat even. If you're doing it that way, you're doing it right. A lot of people rely on that refund as kind of like a savings account, but you're letting the IRS earn interest off of you for all that time. So try to come out where you're flush at year end. In addition, your employer is also going to take out 7.65% for Social Security and Medicare. That's for you. It goes to the IRS, and the theory is that when you retire someday, that money's going to be there waiting for you. What you might not know is that those two numbers are also matched by XYZ Corporation. So they're sending 15.3% of your income to the IRS for you someday. You get the net pay after those are deducted. Oh, careful. I'm looking at it the wrong way. And at the end of the year, you have already paid in almost $5,000 to your bill at the end of the year. And you've paid an additional $3,700 to Social Security and Medicare. Your employer has matched that, and they've paid in unemployment for you. Close to $13,000 here that's already been paid during the year on your $50,000 salary. The employer is going to get to deduct your gross salary, and they're also going to get to deduct the payroll taxes they paid on your behalf. So now we come to your business. You start out in the first year, you're not making a lot of money. Hopefully you're covering your expenses as you go along, but you might come up negative. It's just typical with any small business startup. Second year, maybe you make $10,000, $15,000, same thing, you're covering your expenses. Or maybe there's a small profit, but it's not a big deal. Let's go into the third year where you're cooking here. You make $100,000 in commissions, and you scrape together all your tax deductions, and you get $50,000 with them. That leaves you with a $50,000 net pay. So you go to your tax preparer and you say, what do I owe? A couple thousand? And they say no. Remember that $50,000 that XYZ company was paying you? You haven't paid any of those. So now you owe, right off the top, 15%, both the employer and the employee portions of the Social Security and Medicare. That's $7,600 on $50,000. And I don't know about you, but if I walked into my tax preparer and they told me I owed $7,600, I would fall over. I don't know a lot of people that can pay that, just write a check for it. And if you go on a payment plan with the IRS, you're going to spend the rest of your life paying it back. In addition to that, you still haven't paid federal income taxes on that. And that's going to be another couple $1,000. That's why I'm here today. This is where I get people. They set up a company because someone told them an LLC would be great. Someone on the internet, the mailman, and they go in and they start earning money. And when they get to this point where they're really cooking, that's when they ask for help. And I have to tell them they owe $12,000 to the IRS in March. It's happened so many times, I can't tell you. One person I know, it happened. They went to their CPA, they paid the 12 grand. The CPA did nothing. The next year was another 12 to 15 grand. This went on for 5 straight years. 5 straight years, it was $80,000. This applies whether you're a Schedule C. It applies whether you're a pass-through corporation, or it applies if you're an LLC. So what do? It's called an S corporation. And your first thing you're probably going to say is, I was on Sunbiz and I didn't see anything about S corporations. That's because it's not a legal entity. It's a tax entity. The only one who can give you this is the IRS. So if I set up an LLC for structure purposes, I can immediately go and ask the IRS to treat me as an S corp for tax purposes. All you have to do is file a form. And as long as you file it on time, they send you a letter and say, okay, we approved you to be an S corp. And then you go forward saving money. How does that work? Think of Duke Energy. If you are a shareholder in Duke Energy, you're not an employee. You're getting dividends. You're getting them on a regular basis, and they're not subject to payroll taxes. But the employees who work at Duke Energy are getting paychecks. They are getting payroll taxes taken out. They are employees. So the IRS has seen all these people who suddenly have to pay $15,000. And they're saying, maybe there's a way we can do this differently. We realize that as a small business owner, you are wearing two hats. One, you're the shareholder who's entitled to net profits coming out of there that aren't subject to payroll taxes. And number two, you're the employee, most likely the only one, and you need a paycheck that is subject to payroll taxes. So they let you divide that up. That $50,000 that you earned, you get to decide how much of that is taxed and how much of it is dividends. The only thing the IRS says that you have to do is pay the employee a reasonable salary, but they don't define that. There are theories out there. You could, what would a realtor earn as a salary based on 50,000? Basically, they're going to look at it in proportion. So if I make 50,000 and I put 10 of that into payroll, is that reasonable? Maybe. But if I make 500,000 and I put 10 of that into payroll, I'm pretty sure they're not going to find that reasonable. So your goal is to kind of put some of that money into payroll, but not all of it, because you don't want to pay those additional self-employment taxes on those dividends. And your company will get to deduct your salary and their portion of the payroll tax. So that's going to bring your tax bill down a little bit lower. The employee you will get a W-2 from the company, and the employer you is going to get a K-1 showing the distributions that went out to you. Okay, so here's a scenario. Let's say on that 50,000, we decide that 20,000 is going to go to the employee as payroll. You do not have to write yourself payroll checks. All you have to do is file a payroll report saying how much you put into payroll. And what I would suggest, if I knew my employee was going to make 50,000, I would say we're going to put 20 in there as salary. And every quarter, we're going to report 5,000 payroll. And we're going to pay the payroll taxes on it right then and there. And at the end of the year, we owe nothing in payroll taxes. The payroll taxes on 5,000 would be $765, which is a whole lot better than 7,000, for a total of 3,000 total. And the only thing you have left to do is to pay tax on the income itself, and the owner can make quarterly payments as they see fit. And as I said earlier, I go by ear with my clients. We just check it one quarter at a time. Because at the end of the year, I want them to be all paid up. I want them to have put something reasonable into payroll, and I want them not to owe anything. That's the come back and bite you. Who is eligible? First of all, you have to be a U.S. business. You can't have more than 100 shareholders, not a problem for most of us. You can't have any corporate shareholders or non-resident aliens. So if your friend in Canada wants to go into business with you as an LLC, you can't be an S corporation. You can only have one class of stock, and you can't be a financial institution or an insurance company. How to apply? You go to irs.gov and you download Form 2553. It's a PDF, you can fill it out, and there's a fax number in the instructions. You want to fax it to them because the IRS is notorious at losing these things and saying, we never got it. Save your fax receipts. The timing, needs to be filed within 2 months and 15 days of the tax year that you want to use it for. So if your tax year starts in January, you would need to file it by March 15th. If you want it to apply to that tax year. If you want to go the first year without it, the second year without it, when you start making money, go ahead and file it for the year you want to use it. There is an exception if you have a good reason why you didn't file it on time. And I use that with a lot of my people who came in, they didn't know this was an option. And I try to file it for the prior year. And what I say in the reason is that they just weren't told. No one told them that this was an option. Whoever set up their company didn't let them know. And it's not fair that they should be punished because they weren't told properly. And I've never had the IRS say no on those. I can't go back more than 1 year. But if somebody comes to me in January with one for last year that I know they're going to be hit with self-employment tax, you can bet I'm going to file a late election on that. So we're all done here. With planning and input from your attorney and your tax preparer, you can find the right structure for you that works and the right tax strategy that works. So I strongly suggest that you meet with professionals. I don't know any attorney out there worth their salt that will not give you a free consult about anything, especially right now because they're doing Zoom consults. So call them up. I'm setting up a business. What do I need to know? There's no one solution for everybody. The clients I have that have a high liability, like construction workers, anyone with rental properties, I put them in an LLC immediately. If they have multiple rental properties, there's one LLC for each property. And if it's a single member LLC, you don't need to file extra tax returns. You can just add them on to your regular personal return. But you got to protect that property. It's worth it for a little bit of extra paperwork and extra filing fee to protect that property from the other properties. So everybody's different. It depends on whether you have creditors coming after you. There's no one size fits all here. So I urge you to sit down with your professionals, find out what's right for you, and do it before it's too late. That's it. So I'm going to do this as a 3-part series. The next one I'm going to do is on tax deductions, what you can deduct, what you can't deduct. And no, suits and things don't qualify as uniforms. I have a lot of people that try to do that. It doesn't. You have to have an embroidered name on there for it to count. We're going to cover bookkeeping basics and we're going to cover financial statements because a lot of people don't know that. And if you go to apply for credit or for a line of credit or something, they're going to want to see your financials, a profit and loss statement, a balance sheet, and you kind of need to know what's in there and what they're looking for. That'll be the next step. And then I want to do also a retirement planning series because as part of your small company, you could set up something like a SEP, which is similar to an IRA, and you can start putting your commissions away for you instead of paying it to the IRS. So when you get to that point where you're starting to make money, we're going to, we want to talk about retirement. And I have a guy with Northwestern Mutual that I pal up with, and he's real good at presenting this. So thank you. I appreciate your time here today.
So how can we get in touch with you?
Best places on Facebook. And on the front page is all my contact
How do
info.
you spell your name? Because it's different.
Diane, Dianne,
2 N's.
2 N's, Griffith.
So Facebook is best.
Yeah. One final thing, I never charge for advice. I know that's unheard of in the legal community, but I never do it. Not if you're a client. If you're a client, if you're not a client, it doesn't matter. You can ask me anything you want at any time. Send me an email, send me a Facebook message. Just, Diane, should I do this? Shouldn't I do this? We can sit down and have coffee if you want.
What's your email?
GriffithLawTax@gmail.com. Because I care about
Can you
this.
put it back up there when you have it?
The first
Possibly.
slide.
Let's see.
Thank you.
Okay. This new PowerPoint is all new to me.
Hit this.
That'll work. There we go.
Oh, okay.
I care about small businesses. This is my passion. And I don't want to see anybody have to pay that kind of money at your end. That breaks my heart. Because I know if someone had stepped in, it would have not happened. And the person that was continually paying $15,000 a year ended up owing $1,500 the year I did it.
Nice.
So that's a big difference. They almost fell over. And it's malpractice to let your client keep paying $10,000, $12,000, $15,000 a year and not do something to stop it.
At what point for a starting agent, let's just say that didn't make anything this year, but next year, all of a sudden, things start happening, making, $25,000, $30,000 within the first few months. Is that when you should act on going to maybe an LLC or?
You would want to look at your expenses. What I would do is I would sit down and say, what do we have in expenses so far? And see what the net profit is going to be off of that. And if we're going to get slammed with self-employment taxes, then yes, that's the point. We start looking at it. I just play it by ear. And I would do a late election if it was past the cutoff date. And it most likely would be approved. But you really kind of play it by ear, because once you incorporate and start doing this, then all those documents start kicking in and all those requirements. It's funny.
No, I was,
Oh.
Diane started doing my taxes back when I made like $1.50.
It was never, stop that.
Well, so, I can only say, she has saved me a ton of money and a ton of heartache and a ton of tears over the years. So I've called her before to say, holy shit, I need your help. So, she really knows her stuff. She gets really passionate about it, and which is good because it makes you passionate about it.
I love a good fight with the IRS. And on the flip side, Bunny sold us the perfect house. So she got rid of my falling down piece of junk and she got us into an awesome house. So the admiration is mutual.
So I suggest you guys call Diane and just, let her, give you some advice on your business. Because everybody's business is different levels, different places. And, just let her help you.
Yeah, check in with me as you need me. That's what I care about. So I wanted to get to everybody before the end of the year in case you start making changes for next year. So
Yeah, I have found over the years when I put help in the subject line, sheet.
she's got it. I'm terrible at telephone. But if you want to sit down and have coffee, you can buy me a cup of coffee and pick my brain as much as you want. So